The allure of investing is the allure of making money without doing anything, the allure of getting rich quick, the allure of living a good life. It is the ultimate human desire. But is this really investing? I'd say no. Human society has evolved over the years to reward people in relation to their social contribution. An investor is a professional, just like a doctor, lawyer, or an actor. An investor is a professional whose role in society is seldom understood. You may think that the primary purpose of investing is making money. That's far from true. Just like every other profession, even in investing, making money is only the outcome and not the purpose of it. The core purpose of investing is to allocate capital in the most productive way possible. Capital is required for any human enterprise, and ensuring that it goes to the most deserving ones is the job of the investor. In economics, the most deserving is synonymous with the most profitable, and so the outcome of a good investment is measured in terms of profits made. Money can sometimes be made purely by luck. Luck works on Wall Street just as much as it does in Vegas. Being in Vegas or being in New York doesn't determine if you're an investor or a gambler. It is the existence of an underlying economic logic that makes you an investor. When the underlying economic or social purpose is missing, the opportunity is not an investment, it's a gamble. The reason why I stress so much on understanding the social purpose behind investing is because that is the only way to truly distinguish investing from gambling. Let's take the example of a power company in India. This company had sales of rupees 2.25 crores, profits of just 1.5 lakhs, a net worth of 200 crores. It was yet to start up any power plant. The fair value of the company should have been rupees 2 per share, since it had 100 crore shares in the market. Yet, this company offers to sell those shares to investors at rupees 450 rupees per share. Would you have bought those shares? I'm sure most of you are saying no. See, here are the factuals. This was the most successful IPO in India, being oversubscribed by over 10 times. Every college kid, every housewife, every individual who had even 10,000 rupees to spare opened a demat account because they wanted to invest in this company. Every second advertisement in the electronic, print, or outdoor media was that of this IPO. At the end, people were willing to offer this company more than rupees 1 lakh 10,000 crores at a price that was 225 times its fair value. Do you know what happened to the stock? Let's see. It's been 7 years, but the stock has never traded even close to the offer price of rupees 450. Everyone lost their money on this. The company opened itself at a price which was lower than the stock price. And after 7 years, here's where it is. Any guesses on the name of this company? It's called Reliance Power. Now you know what I mean by gambling. Everyone knew that there was no underlying business. Everyone knew it was wildly overpriced. Yet, everyone took a bet that the stock would go up after listing. Why? Because in the year leading up to this IPO, 107 companies went public, and every one of them saw their stock prices go up after listing. So if this is gambling, what is investing? Now that I've spoken about what investing is not, let's get to understand what investing is really all about. The primary goal of investing is capital preservation. That's as simple as it gets. It is often thought that investing is all about maximizing returns. The reality is quite different. Investing is about maximizing returns while still keeping your capital intact. This is because no amount of return can make up for the loss of the invested principal amount. That makes capital preservation the primary goal of investing and returns maximization the secondary goal. Large institutions regularly invest a substantial part of their fund in assets such as government bonds and gold to simply preserve their capital in adverse market conditions. One can chase high returns only when the risk of losing capital is low. I would like you to understand investing through this pyramid. This pyramid explains the decision-making process of an investor. I would like you to think about your current financial decision-making process in the context of this pyramid. As you can see, investing is at the very tip of this pyramid. It is pointless to jump to the tip without understanding what the base layers are made of. The base layer is called financial discipline, because being disciplined with your money is almost a prerequisite to even start thinking about investing. If you are not disciplined with your money, you will never have any money to invest in the first place. Are you saving a fixed amount of money every month? Are you paying your bills on time? Are you taking on more debt than you can afford to repay? Do you have a handy financial record of all your transactions over the last 3 years? These are the questions that you should ask yourself to assess where you stand with respect to financial discipline. This lecture series will not be able to help you plug any gaps in this area. I cannot claim to help you formulate new habits or inculcate discipline without knowing you personally. If you feel there is a problem in this area, what you need is a financial coach. This would ideally be someone who understands your personality, your habits, and is also privy to your major financial decisions. Such a role can ideally be performed by a spouse or parents or anyone in your immediate circle who is more responsible than you when it comes to money. Financial planning and investing are the middle and top layers of the investor's pyramid. Financial planning and investing are two words that are often used interchangeably by people. However, these are two distinct processes. Financial planning is a very personal process and involves making a plan based on your specific needs and circumstances. As my friend Elaine puts it, your personal financial plan is as personal to you as your fingerprint. A financial plan becomes your guiding document on where to invest, when to invest, and how much to invest. Investing, on the other hand, is the actual process of selecting the particular investment vehicle and putting your money in it. To put it simply, financial planning is all about you, your needs, your aspirations, and your circumstances. Investing, on the other hand, is about the financial markets and the economy. Great investors such as Warren Buffett are good at both financial planning as well as investing. If you're not into investing on a full-time basis, it would be unreasonable to expect yourself to become an exceptionally good investor. What you can reasonably expect though is to become great at financial planning and average at investing. The good thing though is that even if you achieve that much, you can end up doing really well in life. Since this is a beginner lecture series aimed not at financial professionals, I will be focusing on getting your financial planning right and on not getting your investing substantially wrong. If you have a strong financial plan and you can avoid the most common mistakes in investing, you should be able to accumulate a fortune over time.